Hello, and thank you for joining us. This is No Soundbites Allowed, and I am your host, Michael Voss, Dragon of the Southern Tier. I'm happy to be here with you. It is March 14th. It's Tuesday, and it's about 3:30 in the morning. It's very early in the morning, and many people may be wondering, why would you be up at that time? What could you possibly be thinking about that you have to tell us at 3 in the morning? Well, the answer is the U.S. economy. That's it. The U.S. economy is keeping me up at night, and many other people. Some banks are in trouble. And that may mean the U.S. economy, U.S. stock market, and therefore the global markets and the global economy may be in trouble. The question is, should we be afraid? Is it that bad? What can we predict to see what will happen? We'll try and answer some of that with you right now. But first, before we do that, I want to say, hello and welcome if this is the first time that you're seeing our channel. We do long-form political commentary, and every Sunday at 2:30 p.m. Eastern Standard Time, we do a live stream with you. We reach out on all the social media that we can to hear your voices from anywhere in the world to tell us what you think about the issues that are affecting us all. You can reach us on YouTube, Facebook. You can call in to 607-242-9247. on our Sunday live stream every Sunday at 2:30 p.m. Eastern Standard Time to tell us what you think about the issues that are affecting us. Because we believe in the First Amendment. We believe free speech is not restricted to the United States. We hope to see you this Sunday at 2:30 p.m. Now, with that said, we want to take a look at what's happened. There is now currently the BBB, the Biden bank bailout, that has gone into effect from Sunday throughout Monday, and we're going to see this moving forward. And it has been put forward by the Biden administration that this has saved the U.S. economy, that everything's okay. Your assets are safe. That's what he said, and we can see that. It's been stated by CNN when Joe Biden came out, talked to the American people, and said the banking system is perfectly fine. SVB, Silicon Valley Bank, did fail, but they are doing everything. To quote Joe Biden, he said, Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We will do whatever is needed on top of all this. It's a very interesting statement. We know that management of these banks have been fired or will be fired. The FDIC is ready and or already taking over several banks, and people running the bank should not be working there anymore, that investors in the bank will not be protected because they took risk, but that they're going to do everything they can. These are the words of Joe Biden. And the Treasury is indicating that they think this will be fine, that overall the actions by the White House have reassured the stock market and banks, and there shouldn't be a problem going forward. In fact, the Treasury says the thing we are targeting was uninsured depositors feeling as if they weren't protected. The scale and the breadth of what we did has sent a message. Well, it kind of did send a message, but then again, it didn't quite send the message. I mean, if you're looking at just the editorial board of the Wall Street Journal, Biden's bank bailout whoppers. The president offers assurances that markets don't believe. That was also yesterday. So the question is, which one's telling the truth? Who's really got a hold of this? The Wall Street Journal, which deals with the stock market every day, day in and day out, or Joe Biden? Well, it's a little bit of both. And understanding that difference, that it's a little of both, will help understand what's going to be happening in 2023 all the way until 2025. And you need to be aware of that. I used to be a stockbroker, did that for about 10 years. Most importantly, I want you to understand fear is the worst thing that could possibly happen. Your fear could make things far, far worse than anything else that could happen. And that's why the president was speaking. His primary objective and the primary thing he can do to help balance the markets and stop bank runs on banks is to reassure the American people that if you have $250,000 or less in a bank account, that the United States government will replace those funds, that you are insured for that first $250,000. If you have more than that, that's at risk. But $250,000 or less, that's yours. So that's important, and that is absolutely correct. There is no question on that. Why is it then, knowing this, why is Joe Biden speaking? Who's he speaking to? The average American citizen? No, not at all. You see, the average person in America has roughly about $41,600 in a bank. That's the average that people have in their bank accounts. Many people have a balance of around $5,300. That's money moving in and out, paying bills and so forth. Right now, we're in a political mode, once again, where blame is being assigned. That's the biggest issue right now for Joe Biden. The first thing was to assure you that you're safe. The second thing is to blame somebody else. It's not his fault. It's not the Biden administration. And we've seen many individuals like Representative Jimmy Gomez out of California have come out and they're all blaming President Trump. It's President Trump's fault because he changed banking rules. And that, of course, is the only reason why we are seeing the banks fail at this time. But that's not really true. That's not even close to being really true. There have been bigger problems facing the markets than this for quite some time. Let me explain what I mean and why is it that the editorial board of Wall Street Journal believe that Joe Biden is lying through his teeth. And I'm going to try and use as few numbers as I can, but let's look at the Dow Jones average. That's what most people think of when they think of the stock market, when they think of the economy. The thing they tend to look at is the Dow Jones Industrial Average, which isn't really an accurate way of looking at it, but let's take that. And as you can see, for the last year, we've been as high as 35,492. We've been as low as 28,660. We currently are at 31,819. Those numbers don't mean a whole lot to people. All you know is that in your 401k, your investments out there, the market is pretty much flat. It's down slightly, about 3%, 4% for the year so far. But that's not telling the full story. Let's take a look at the markets more realistically. So we're going to take a look at the Trump administration move forward. Let's see what's going on with the U.S. economy. Now, back in January of 2017, before President Trump took office, the United States economy was at 20,433. And then it moved up, right up until we started dealing with the pandemic. During the Trump administration, essentially, the stock markets thought everything was fine. They thought that President Trump had a good fiscal policy. It was good for the markets. It was good for everyone. After the lockdowns, the United States government under President Trump started printing money, essentially, to make sure that the economy would be able to restart. And that was found to be very positive. It helped businesses. And so the stock market continued to go higher. It was in October of 2020 that the markets got a little nervous again because they saw that Joe Biden might be taking over, that he might win the election. And so the stock market dipped, as it usually does ahead of elections, especially if a Democrat's winning. Democrats are historically known for tax and spend policies, which aren't necessarily good for businesses. The market got over that, and they continued to move forward all the way up until the week before the transition of power. Right after Joe Biden took office, the stock market dipped. He killed 11,000 jobs on day one. That's the Keystone Pipeline. And this would, of course, have an impact on U.S. energy. But it wasn't clear how big an impact he was going to have. And so the markets were kind of waiting to see what would happen. But throughout his first few months, Joe Biden also decided to increase the amount of free money or easy money available to businesses. He increased the amount of loans and dollars available to small businesses and mid-sized businesses, actually all businesses. And so that was good. The markets were still satisfied. There was some inflation, but it seemed to be reasonable in the first month or so. And his policies were unclear, but seemed to be positive, and he was supporting small business and generally all businesses. And that was true right up until the summer of 2021. Now you may say, well, Mike, why was it the summer of 2021? What caused the markets to slow down, dip, and then go pretty much flat right up until November of 2021? What might have happened during that time frame? Well, if you may recall, it was during that time frame that we were having problems in the Middle East, that Joe Biden was trying to run away from Afghanistan, and he was trying to do that relatively quickly. And then it was also during that summer that we saw that the Taliban took over Afghanistan before Biden could run away, and then he got embarrassed and had to evacuate. But in September, Joe Biden promised that all Americans had been saved except for 100, maybe 200 people, and that we were imminently going to get all of them back home, and that this was a general success. And so everything was okay. January of 2022, why did the markets start going back down, and why have they essentially been continuing down ever since? We started to hear from Russia that they were looking to take over the Ukraine. That had future implications. Everyone understood very clearly that was going to impact the world in terms of food, in terms of energy, in terms of geopolitics. So that's the charts, and that gives you the general outlook of what we have seen under the Biden administration. We noticed that there were problems February 17th of 2021 that we made our prediction that the second half of 2021 was going to be an economic crash for the United States. We were one of the few who were actually saying that so early into the Biden administration's economic outlook. It's because we were looking at the long-term implications of shutting down the XL pipeline, cutting off other future oil and gas leases, and a strong push for renewable energy, which the United States is not prepared for, and we don't have the electric grid to maintain. The Biden administration not helping out small businesses, that we were printing too much money and that was going to cause inflation. And then we had the problems with Afghanistan, and then came Russia. So that's why we had that impression, and we were able to make the prediction in February when the rest of the world was saying they just weren't sure. And one of the old sayings that we had is, the market never goes higher without the banks. And usually, if the banks are going down, so is the rest of the market. Pretty straightforward. Banks make money because you have money. When money is easy, you don't have to worry about a business making as much of a profit or being as good, because there's plenty of money around to buy products. And they do okay. When money gets tight, well, now businesses that were okay to average, they get squeezed out. They fail. They can't pay their loans. They can't pay their workers. They go out of business. That's just the quick and easy way to look at this. Again, I'm trying to condense a lot of financial data into as few charts and numbers as I can to still get the theme across to you about what happened with Silicon Valley Bank and what's happening to the banking sector. And everyone in the banking sector realized that with Russia moving into the Ukraine, this was going to cause a problem, not just for energy, because fighting against Russia, well, that is a major war, not a minor one, and it takes a long time. So this is a drain on the resources of the United States. And that brought us right up until the end of February, the beginning of March, where, again, they were consistently dropping down lower and lower. Now, I want to show you one more chart. Again, I'm not trying to go by the numbers here. I want to give you the general feeling. But the thing that changed when we got into March, what is it that changed that's starting to affect banks, certain banks, throughout the United States? 1, inflation. 2, the continuing war. 3, the pressure on energy and food. But probably 5, the most important thing is the Biden administration stopped giving money to the businesses in the United States. they started pulling back. They started cutting off all the extra money that was being put into the economy to balance out the pandemic. You may have noticed that with the IRS. You're getting a smaller tax return this year. Many people who are getting government assistance notice that they have their amount cut because, again, the pandemic, the extra money from the pandemic has been cut on the state and federal level. When you put that together now, if the easy money is gone and interest rates are going higher and it's harder to make money because people aren't spending as much because they don't have the extra money, whether it's a mortgage or credit card companies or business loans, they start failing as interest rates start going higher and they can't make the payments. It is very predictable, and the stock market was predicting it and they were reacting to it. In addition to all that other pressure, Biden also came out with his $7 trillion tax plan. And part of that is, again, increasing corporate taxes, something that was a fear for many in the business community when he got elected, making it less competitive for U.S. products around the world. At the same time that there is inflation, that Joe Biden is trying to return to the 2017 taxes, where the United States had the highest corporate taxes in the world at about 39%. So I've said all that to try and give you an idea of what's happening, what happened, and what will happen going forward. Because no matter what Joe Biden is promising right now, no matter what the Treasury is doing right now, more banks will fail. More businesses will fail. More people will lose their mortgages going forward. And you're going to pay more because of inflation and higher interest rates. That's just a fact. And if you haven't been preparing for that, well, it's not too late now, but get ready. Because as we have been saying for more than a year now, we're in a recession. And that recession is not going to end until we believe around 2025, as several economists agree around the world. Why are we in a recession? Why is it going to last that long? Well, the first factor is Russia is not ending the war in the Ukraine anytime soon. We were all promised that it would end in a month. Then we were told 3 months. Then we were told 6 months. Well, now we're into a year. We believe this is going to last for probably 10 years. But immediately in the short term, the problem is there's not enough energy in the world. There's not enough fertilizer in the world. There's not enough food in the world. As we have predicted, we are in the middle of a food crisis right now. There's 30% less food in the world than there was in 2020. The major supplier of fertilizer in the world is in the Ukraine. One of the largest bread baskets in the world is in the Ukraine. And of course, the war is stopping the wheat from getting out into the world. It's stopping the fertilizer from getting out in the world. That's going to still be the case going into next year. We're starting to plant crops within the next 2 months. Unless that war ends immediately today, we're not going to have enough fertilizer. So next year, there should be crops about the same amount as this year, which is 30% less than what the world needs. That's going to keep inflation on food high, even in the United States. At the same time, that war is affecting energy. Straightforward. Europe gets a lot of their energy, and Germany gets a predominance of their energy from Russia. Russia is playing games with the energy, the gas and oil that they provide to Europe, which causes spikes in the cost of energy. And of course, the United States is not energy independent anymore. That ended with the Biden-Harris administration. At least for the next year or so, energy prices are going to continue to be higher. That's inflationary. That hurts the U.S. economy. It hurts the global economy. That means that businesses in the United States and around the world, but in the United States, are going to have a harder time being able to compete. This is something we can predict for the next year to 2 years. That's the reality of the impact going forward. It's not ending anytime soon. Banks have been lending your money to these businesses. Many of these businesses, as an example, Disney, have taken on ESG and DEI, sustainability, clean climate change policies, as well as diversity and equity policies that aren't really based on anything substantive. They're political issues. They're not helping. And if you're looking at diversity and equity, well, the best person isn't always being hired for the job, just the person who fits enough check marks to get hired. So I'm trying to make this make sense. I hope you're following this. I'm trying to make it simple for you. Add to that, Joe Biden is spending $7 trillion. To be a little more accurate and to be exact, Joe Biden's going to be spending $6.8 trillion according to his predictions of what his budget would be. That includes taxes on billionaires, increased taxes on corporations, as we mentioned, a repeal of the Republican tax cut in 2017, make the Obamacare subsidies permanent, which means we're spending money on Obamacare again. These are just a couple of the things where he's increasing the net spending and that he's going to pay for it all by having higher taxes. Again, as he mentioned, he's going to have $5 trillion in new and increased taxes. And he thinks that's going to pay for it all. Basically, it's going to pay for $300 billion a year over the next 10 years. The problem with that, as we see it, is that Joe Biden isn't thinking it through. That assumes that businesses are making money, that businesses are staying in business. That's not realistic. He's never going to get the $5 trillion because there won't be as many businesses. Those businesses that do exist won't be making as much money because of inflation, and their costs are going up. Again, that goes back to energy. That goes back to the Ukraine war. And while that's happening, Joe Biden is printing more money than we have seen printed before, which puts us into not just a recession, but a stagflation, something that people who are old enough, like myself, from the 1970s under President Jimmy Carter, you may remember what that was. Joe Biden will never get the taxes that he tells us he's going to get, which is very common for Democratic tax and spend policies. They expect that there will be a never-ending flow of money coming in to pay for everything they're going to spend, and they're spending more than we can possibly ever afford. As you can see from the Guardian article here, Joe Biden has said, for too long, working people have been breaking their necks, but the economy has left them behind. That's not true. That wasn't true until after we went into the pandemic, until we went into lockdown. So Joe Biden is misrepresenting the past to try and make his future look better. Joe Biden goes on to say, my budget is going to give working people a fighting chance. He's lying to you. Joe Biden is giving you a rose-colored, rainbow-filled unicorn picture of the future, assuming that everything went perfect. If the war in the Ukraine ends, if fertilizer is distributed around the world like it used to be in 2019, if we grow as much food as we were growing in 2019, 2020, if inflation reduces, if interest rates stop increasing, if businesses make more products and you go out and buy more stuff, then everything is going to be perfect and all the taxes will come in and everything will work out. It never happens. Let me give you something else to look at here. Again, we're trying to give you charts so you can see exactly what we're talking about. This is the chart for electricity. Since the day that Joe Biden took office until today, the most recent data coming from January 23rd, we have seen a 24% increase in electricity alone. That's money you no longer have, but it's also money that businesses are spending that they're not recovering. That's just from electricity alone. It doesn't take into account anything else. Inflation has been going up every month that the Biden administration has been in office. Food is up 10%. Energy services are up 27.7%. These are the things. Looking at transportation, up 14.6%. Shelter is up 7.9%. These are essentials. You cannot live without some shelter, electricity, transportation, and food. And we already see that there are layoffs that have been happening since the beginning of January. There's about 100,000 layoffs so far, and we're seeing that we're also seeing, this is from the Bureau of Labor Statistics, we see that unemployment's up 3.6%. It tells us that not only have we gone from inflation to a recession, that we are probably looking at stagflation and a deep recession, which will be likely to last for the next 2 years at least. It's Obama 2.0, and businesses will likely do exactly what they did last time. They'll take the money and they'll go back overseas. They'll park the money anywhere and everywhere but in America. And companies are already missing their payments to banks for their loans, whether it's a mortgage or a business loan. They can't keep up, and there isn't new money coming from investors or angel investors or technology investors. The money isn't there to support them, to let them coast through this rough patch. Silicon Valley Bank failed. That's why we've seen several other banks fail, and we'll likely see more banks fail going forward, though not at the same size, but yet they'll still fail. So that means we're not at the end of this. In fact, we're probably closer to the beginning than even the middle. How does this affect you? It means that more people are going to be laid off and lose their jobs. It means more businesses are going to close. There will be more mortgage foreclosures. It means that the things that you buy, food, clothing, your home, your electricity, are going to go higher. Your credit cards are going to cost more money. Probably also your car loans and even maybe your college loans are going to cost more money. And the more money that the Biden administration spends to try and make you feel good about all of that, the more inflation he will create, making it worse for you and making you more and more poor. What can you do about this? Not panic. That's number one. Don't panic. This is all subject to change, but at least you have an idea of where the economy is going towards and what the stock market is looking at, what businesses and banks are looking at. This may be an opportunity to take new investments. This may be a point to let you go in and make investments at these lower levels for future gains to come. It may mean that you buy bonds instead of buying stocks, which is a good alternative. That's what many companies and many banks are doing now. It means that you need to be smarter about where you spend your money. It may not be the smartest thing to have a Hulu and a Netflix and a Disney Plus all at the same time. You need to cut back. And you have to buy more foods that will last longer, more rice, more wheat and flour, more canned foods. Maybe grow a garden in your backyard. Maybe can your own foods. Do some homesteading for yourself. Maybe grow chickens in your backyard to make up for the eggs that have gone up 580% and to have them when eggs are scarce around the country. These are options that you have. Make those plans. Think about that. You are far better at budgeting than the government has ever been. And you are able to predict your income far better than the government ever has been. The government has always been wrong under Republicans and Democrats. You have to be smarter than the government, and you are. You just have to make a plan and not be afraid. There were bad days in the 1970s in stagflation. We made it through that. We made it through the Great Depression. We made it through Obama's so-called Great Recession. We will make it through this as well. You just have to be prepared. But that's the way we see this. This is the way we see the economy going forward in the next 2 years. We'll, of course, keep you up to date as things change. And we're always happy to hear what you think about this. Are you overseas? How is America affecting your economy? Is it very similar to what we talked about for the United States? Is it better? Is it worse? How much influence do you think the war are having on all of these pressures? What do you think? We look forward to hearing your comments, and we hope you'll join us every Sunday at 2:30 p.m. Eastern Standard Time to talk about this and other issues that affect everyone.